Hi everyone, good morning and welcome to today's morning report on Tuesday the 28th of July with me, Rich Perry, market analyst at Hantech Markets. The trading session in the European hours has got off to a fairly neutral start really, but that's coming on a bit of support really that we haven't had for several days really. Huge declines on stock markets, certainly in Europe, around about 1% a day that we've seen on the downside in the past week or so. But finding a little bit of support today, that all that weakness coming through equity markets has basically been driven by this continued sell-off in commodities. What you can see here in this chart is the oil price continues to fall precipitously really. It doesn't really show any real signs of stopping, and it's falling back towards those March lows again. What we've also seen, this is copper. Copper continues to fall away, although it's slightly ticked higher today. Certainly in the context of the recent decline in the last sort of month or two, it's hardly anything really. So continues weakness there, and that has basically also been driven by the volatility on the Chinese equity markets as well. They continue to fly around, following on an 8% decline we had on Monday. And that was followed up today by sharp volatility, both lower and then higher, but closing around about 1% lower. So Asian markets certainly not really gaining too much confidence on the back of that either. But certainly at the moment, the sentiment in Europe is fairly sort of mixed, really. But it could well be that we're finding a bit of a level ahead of this FOMC meeting that's on Wednesday, or the result of that meeting on Wednesday. So in terms of what we got to look at forex markets, well, we're seeing the dollar, which has just regained a bit of ground after a big decline yesterday on that dollar, as the euro continued to recover. But interestingly enough, the euro is back to around that pivot level that I've been talking about again, 110.50. I'll look at that chart in a minute or two, but certainly the forex markets are a little bit mixed today. You've got sterling looking forward towards the GDP data as well. So some interesting moves that we're seeing on these forex markets today. Now, data that we've got to look forward to today. Well, first of all, GDP for the UK at 9:30. Forecasts are coming at 0.7, so only quite a strong improvement. That was the flash data 0.3 last month, or the preliminary data, last quarter, and then it finally ended up at 0.4% positive. So it would be quite a strong improvement on that 0.4% up at 0.7, which is sort of the levels that we saw in mid to late last year on that. So that would be a pretty positive recovery in that UK growth. Then into the afternoon, we've got the Case-Shiller house price index, and that is expected to improve again, actually, from 4.9% last month, picking up to 5.6. So that would reflect this continued sort of improvement that we're seeing in the housing market, and certainly the data that we've had out through this month, or in recent days, has certainly pointed out towards that anyway. And then finally at 3 o'clock, we've got the consumer confidence, if this chart ever shows it. We've got consumer confidence for the States, and that is forecast to come in at 100, bang on the nose. And that's slightly off from last month, but last month obviously was a pretty decent showing, and quite a strong jump from the mid-90s that it saw the previous couple of months before that. So it certainly would be still a pretty positive reading, is at 100.0. So that would be in front of this FOMC meeting. So could that have an impact? But my chart of the day, I've noticed a really interesting development actually on the Aussie Kiwi, which could show the Kiwi turning around. Let me just show you here the chart. You've got pretty much what I would class as almost a classic double top pattern. You've got the double top in place there, with the move below 110.16, and that gives us a downside target of around about 360 pips to the downside. So that gives you a downside target of around 106.60 to the downside, which is interesting. And that move has been completed, I think, because you had a close below that level yesterday, 110.04. below that neckline. It certainly continues to slide today, but look at these momentum indicators confirming the move. You've seen the RSI falling away, and the RSI is now at a 3-month low. MACD line is also a 3-month low. Stochastics falling sharply as well. So you'd certainly say that there is something in this decline on the Aussie Kiwi. The 21-day moving average, which has been a pretty reasonable gauge, not excellent but pretty decent, has turned over and is now starting to fall away. So certainly you'd say that this chart looks to now be a bit of a corrective chart, corrective play. So maybe looking out for little rallies as a chance to sell, perhaps. Looking at the intraday chart, you can see a fairly consistent downside pressure that has, as I said, continued today. So maybe looking out to play the hourly RSI back towards sort of the 50 area. Seems to be about where it continues to fall over. MACD line's still negative. Stochastics also, interestingly, that they're finding as there any recoveries around about 40 or 50 are selling opportunities as well. Even that 21-hour moving average you could sort of look at, which is a basis of resistance now, had been sort of pretty decent actually as a gauge through the last few days. 21-day moving average, 21-hour moving average 109.89 on that chart. So certainly a potential for an unwind back towards that, to unwind some of this very near-term oversold position, but certainly the outlook still remains negative, and again another negative candle on the daily chart. It looks like we're sort of correcting back on this Kiwi now, on this Aussie Kiwi cross, and there's a few support levels to look out for initially. You've got the 109, that reaction high, which 109.12, and then the reaction low that we had within this within the uptrend was 107.07 in fact, and so a couple of levels there to look back at. But certainly it looks like it's sort of correcting back into this sort of support band that we've got around this sort of 108 level, 107 to 108 level looks perfectly possible now. So I'd be looking out for that in my strategy in the coming days. So I wish you good luck in your trading on the Aussie Kiwi, and I will speak to you later. Thank you.